I turned us back on. I think we're live. Let me just check with the YouTube, make sure we're rolling. If we are rolling, which it looks like we are, then yeah, looks good. Okay. Good morning, everybody. Yes, chat confirming we're here. I'm here. You're here. What's going on? Welcome to the morning show, Stock Market TV. Spencer, JC, Steve, Alfonso. A lot going on today. Okay. Kenny Glick, as always. It is Tuesday. We'll have Patrick Donawilla on the show and another new guest, Steve Place, will join us. Love the new guests. We have gotten like so many new guests in the last few weeks. Very exciting time. Steve Place is with Investing with Options. He would join the show at 9. He was kind enough to send over a few charts. We always appreciate when our guests do that. All right, enough of that. Let's bring the guys on and talk whatever it is we want to talk about, shall we?
All right, ladies and gents, happy Tuesday. I'm actually not feeling that hungover today.
No conference call hangover for you?
No, I'm feeling pretty good. I went with like a different strategy this time.
Oh, yeah?
Right? Because when I do these conference calls, my brain gets very exhausted. It's a lot of charts, as you guys know. If you think it's a lot of charts for the final event at 6 p.m., you can only imagine how many charts are there before that. So usually my head is spinning. I have a few glasses of wine. I'm already dehydrated. The wine just makes it worse. You know what I did yesterday? Strazza?
You drink water.
That's right. I drank a lot of water, no wine, no booze at all, a nice hearty dinner of eggs and sausage only. I went full send Perlman last night, and I got to tell you, I'm feeling pretty good this morning, not going to lie. So new strategy. Because, right, sometimes I'm just like, oh, that was a long day. I need a glass of wine, right? Or something like that.
Yeah.
I went the opposite. Perlman would be very proud to hear that, wouldn't he?
Eggs and sausage for breakfast. Love that.
Eggs and sausage for dinner.
For dinner.
Yeah, for dinner, I mean. Breakfast for dinner.
That's a Spencer move. Spencer respects that move right there.
I am all about breakfast for dinner move.
I know.
All about it. I'm also all about the market. Let's take a look at that, shall we?
Please. All right, ladies and gentlemen, we've got the Dow futures down 30 basis points. 115 points to the downside today for the Dow, 39,400. S&P 500 down almost 0.5%, 5,500 and change. NASDAQ 100 down 0.5%, down 100 points this morning, just under 20,000 for NASDAQ futures. Bond futures bouncing back this morning, up 50 basis points on the 30-year futures. Crude oil up again, another full percent this morning, above $84 a barrel. What a ripper we've seen in crude oil. Copper futures, 445, up about 0.5% this morning. Gold down 1/3%, 23.30. Silver up a little bit, just under $30 an ounce. And the volatility index still under 13. Over in the funny money, Bitcoin flat this morning, just under 63,000. Ethereum flat, but around 34.50, showing some strength there. Solana 150, up almost 3% on the day. Binance still under 600. What a disappointment that Binance has been. 580 down, up about 0.5% this morning. And total crypto market cap, Spencer Israel, 2.26 trillion, with Bitcoin dominance just below 55%. So in other words, Bitcoin representing just a tad under 55% of the total crypto market cap. Steve Strazza, I know you're getting hit by a Category 5 hurricane. You seem very relaxed considering the circumstances.
We're gonna be okay.
Thoughts on the futures?
Not much, right? I think the bond market's been really interesting because it's the moves that are taking place. So we've seen a bit of a Trump trade the past, 2-3 sessions now, where you're seeing political bets being made in the market as the odds for Trump kind of increase. So yesterday it was strange because a group of stocks that you would not expect to be higher when interest rates were rallying, interest rates had their biggest 2-day surge since February, the last 2 days, right? banks are breaking out while this is happening. Go look at JP Morgan, made new all-time highs yesterday, while rates are ripping higher. So you're seeing kind of two opposite forces, and one at least has been winning the past couple of days, and that's the Trump trade. You saw it with coal stocks yesterday.
I guess I'm just not understanding. I guess I'm just not understanding what you mean by Trump trade. Can you explain that?
Industry groups that you would think would do better under a certain president were getting bid up yesterday as Biden was crashing in the odds.
Like what? What types of stocks would do well if Trump is president? Obviously, this is in theory, because in practice we're well aware of that it's not the case. But in theory, what types of stocks would do well under Trump?
Big banks, coal
Big
stocks.
banks, right? Why big banks? Because less regulation, right? Less taxes.
And then not solar energy. So look at TAN. It made a new low yesterday. It's absolutely crashed the past 2 weeks.
Right.
So you're seeing it's a political trade that's been going on. Big theme here. And it's what I'm trying to say is it's been more powerful than what the bond market's been doing, at least for the banks. Just look at the price action. JP Morgan, Goldman Sachs, they were all just cruising yesterday. They also just had the stress test stuff. So they're all coming out with their capital return policies right now. That probably has a little bit to do with it. But these are stocks that would do better, one would think, in a Republican presidency. So I think that's what was going on there as well.
Interesting. You're getting hit by a Category 5 hurricane? Is that true? Do I have that right?
We get a lot of misinformation down here when storms come. I think it's supposed to change course still. They try and scare you. Then the news, they need shit to talk about.
They do.
From what I understand, we still don't have to worry too badly.
Right.
Maybe other parts of the Caribbean do.
Yeah, further south.
Mm-hmm.
Yeah. All right. Well, hopefully it doesn't hit you, because I've been through those before. It's not fun.
Yeah, man. It's just tough because we're really stuck, right? And a lot of times, like, you'll get big news like 48 hours before, like, oh, actually it is coming. And it's tough to get out if you just got 48 hours left where we are. So
You're better off on a boat, man. You got to get a boat. Take the boat out.
people will rip their boats up to Florida for cover.
Yeah, that's the way to do it. All right. What are we thinking? I got a chart for you guys. What are we thinking about some of this rotation that we're seeing in energy underneath the surface? Quite the ripper in energy we've seen over the last few weeks. Am I making too much out of it, or do you think that this thing's got legs? Spencer,
No,
if you could throw up slide 2.
It's been quite the ripper, JC, in energy stocks. But if you look at crude oil, it's justified, right? Commodities have been ripping even more, or energy commodities have been ripping even more than energy stocks. If anything, there's a bit of a catch-up trade there for XLE and the energy equities. They've been lagging energy futures.
So that's what I'm seeing.
USO is like back at its April high. XLE's nowhere near it.
Yes, but remember yesterday we did a little bit of a zoom out, whenever in doubt, zoom out sort of situation, and I got to tell you, there was there's some strength and energy. I'm gonna throw up a few stocks here. I want to show you guys. Let's see, let's grab this quickly.
I mean, these are bases. I don't know how much you're talking about zooming out, but like if you just zoom out to the 2022 peak in any of these energy contracts, they're building bases, right? They look like they need more time, but they also look like they're moving in the right direction. Like energy is still opportunity cost, but it's the right idea to be looking there and to be ready.
All right, Spencer, throw up the new slide 3 here, and we'll scroll down. We got a few names that I want to talk about. So this is the Energy Sector Index fund. This is in the United States. A lot of Chevron, a lot of Exxon, still unable to break out above those 2018 highs. We're going on 16 years since this thing peaked and still has not been able to break out. I didn't bring it with me, but the New York Stock Exchange Oil Index, which includes foreign companies, has already been able to break out and make new highs, which, as you can see, look at the next chart, Spencer. You can see like Imperial Oil is a good example. This is what the New York Stock Exchange Oil Index looks like, already above those 2008 highs. So I think that looking at this as a bellwether, as a leader, if they're above the former highs, we want to be looking for energy stocks to be buying. You know, if you start to see the leaders lose those highs, and in this case, for example, fall back below those 2007, 2008 highs, then I think that starts to pose a problem, right? Wouldn't you agree there?
Yes.
And now I want to talk about the refiners, because the refiners have been the leaders in the energy space, no doubt about it. Look at the way that Valero, for example, ran into that key Fibonacci extension level and is consolidating at those levels over the last few months. This thing's got breakout written all over it. I think there's a lot of upside here. Keep going. Go to the next one. Very similar theme here. Look at Valvoline getting up to that key extension level, consolidating over the last few months. You can argue Valvoline looks even stronger than Valero. Again, this looks like a healthy consolidation within an ongoing uptrend after a major breakout. And throw the last one. Phillips 66. You notice how all of these are doing the exact same thing.
Yeah.
Big consolidations, big bases, breakouts last year, achieving their first target, consolidating for a few months. You know, to me, these are all uptrends that I think ultimately break out. And I got one more for you. This one this one has Strazza written all over it. You've got a bunch of short squeeze, $1 billion oil services company, 15% short interest, 19 days to cover. For those who can't hear me in the back, 19 days. Look at that base, Strazza.
We like this one a lot. This one looks great.
Core Laboratories.
Yeah, it doesn't.
So it sounds like they're doing something fancy in the oil services space.
It's
little fancy.
Oh God, we looked it up. They're doing, I don't know if it's actually software, but they help scan the ground for what kind of oil is in there or something. Yeah, they're equipment and services. They're not E&P.
Of all of the short squeeze names, you know, are there any other in energy, or is that the energy one?
You know, we're gonna actually lax our freshly squeezed criteria, because some of these names that have 12-13% short interest that we're not putting on there, I'm thinking about you, Longboard Pharma, they're still squeezing. If they have days to cover numbers that are anywhere near 20, they can have squeezes even if they only have a short interest of 10%. So I think we're going to reduce the short interest criteria and heighten the days to cover criteria, because the more that we're tracking these stocks, we're finding that when those squeezes really go, and we're looking at it like, wow, look at this one, it's a big days to cover almost every time. Look at the Longboard Pharma, LBPH. We're going to put that one in to freshly squeeze. I said, no, only 13 or 12%, whatever I had.
Look at Tesla. Look at go through slide 10.
You know, I was going to say, hey,
is this part of that theme or not really?
Is this part of what theme? Energy?
Energy in general, or is it its own beast? More?
No.
Is energy. So energy ripping, crude oil back above 100, energy sector index making all-time highs, will have no impact at all on the price of Tesla.
Oh, yeah, right. So this would be the pairs trade, right? It's not going to move with oil and gas. It should move opposite of it.
Why?
They're making a bet on no more oil and gas in the future.
Yeah, but if oil and gas are going up, then wouldn't more people want to be betting on no more gas? Right? Like, wouldn't they move together?
Yeah, but wouldn't you want to own an oil and gas stock in an environment where oil was going up?
No doubt. That's why I'm asking, because I'm in the Tesla, and I think Tesla's gonna get to those former all-time highs, dance a little up there, and then break out and go to 1,000.
I wouldn't.
Right? I mean, that's what I think that's the risk in this trade, is the epic ripper.
There's going to be a lot of Teslas on the road, if what you're saying is true. Yeah, that's the bet here.
Do you think it's, when I say things like that, people, you know, they get their panties in a bunch. Do you think that I'm being a little bit dramatic here, or do you think that that's the real risk?
I think that Tesla has the scale and the technology that no other EV maker has, and at this point, frankly, I don't know what the traditional automakers are doing. They're just inefficient companies at this point. So I think Tesla is far beyond all of its peers in terms of just its production capabilities. And I think the bet here is simply that most of the cars on the road in the future will be Teslas. You won't be able to compete with them. The price will be too much lower than the competition, and the product will be too much better. And we're all going to drive.
One hole I think is saying what I'm picking up what I'm putting down. JC is asking if increased oil prices will mean
I get what
or
you're at.
Tesla auto sales. And again,
I don't
I
think so.
didn't say it that well, but that's kind of what I meant. Like, is there something there?
Ask a truck person if he's going to buy a Tesla because the price of gas is going up, and see what he says to you. There are
And then
certain
what's the reason? And then what's the reason that a trucking person would say no?
I think there is a psychological, some sort of addiction to gasoline for some people. I think you need to get out and talk to car people who there are just
No, but is there like a real reason, or is it just little dick syndrome?
No,
No,
it's
some
what
people
a Tesla represents, JC. Right? A Tesla represents
Mm,
clean energy, fighting climate change,
no,
good for the environment. A lot of people just don't care or want to do that.
it's not. So that might be it for some very bitter, unhappy people. But I think it's just true that some people like gas-powered vehicles and they don't believe in climate change. It's not like I hate what this represents. It's just
Yeah, but don't these
Maybe.
electric vehicles move faster?
gas-powered vehicles drive much nicer, and they have a rev to them, and you could feel the engine, and it pulses through your body. You don't get that in a.
Wait,
Okay, I'm
I
asking.
want to
I don't
add.
know. I don't know anything about cars, dude.
You ever
I know
watch the
nothing.
Jetsons? I drive a Tesla. I feel like I'm in the Jetsons. You're just like zoom, zoom, zoom.
And that's not cool. I think that's cool. Is that not cool?
cool. Yeah, it's cool, but it's not. Listen, you don't understand Harley people. You're probably not going to understand this concept either. It's the same thing. Some people just want the gas. They're never going to get a Tesla. I think even with those people never getting Teslas, Tesla could still be 1 out of every 2 cars on the road in the future because they're just that good.
I do want to add that we are anticipating Tesla's quarterly sales figures out today. It's a great read through into the company's business. They already released their Chinese production deliveries, which was down 25% year over year, but they haven't come out with the US Q2 numbers yet. So it'll be sometime in the next, 20 minutes or so. We'll probably get that. Expectations are low for Tesla for the quarter that just ended. So
And
we'll see
also,
what happens.
And also, they were low for today. So we're supposed to be getting delivery numbers. I'm not sure if they're out. They're supposed to be out this morning.
Yeah, they're not. That's what I'm saying. They're not out yet, right?
Okay.
They're expected to fall 6% year over year.
See how this works? Tesla is making a tradable low. Yesterday had big momentum out of that little base, right? On negative expectations, on expectation for bad news, not good news. This is how stocks bottom. They don't bottom on good news. They bottom on bad news when the market says, we're not going to kill them anymore for this. It's baked into the cake.
Yeah.
Sentiment.
I've got one more for you guys, if you don't mind. I know we got Kenny. I got one more, and then I'll call it quits for this conversation, and we can move on. But I do think that this is worth mentioning.
I think it gets to a point where Tesla is just something good that you should own, no different from Apple and Microsoft and Google and the rest of them.
You hated it 30 points ago.
No, I don't like trading it. Tesla is a stock for my IRA, not for your options trades.
Got it. Throw up slide 2 there, Mr. Israel. How about the Fang making new all-time highs for the Fang? How do we feel about that?
Dude, so this one, when you were talking about energy, I'm thinking to myself, well, the best ones they're already going. So this would be one of the most bullish data points, I think, for oil and gas stocks, is that the best ones, even in E&P, this is Explorer and Producer, the best ones are already going. And this one looks like it's ready to go. Again, it's got a nice little flag. It's ready to rip out of it. Looks so good. Yeah, I love it.
Not to be confused with the Fugazi Fang. The Fugazi Fang is a bunch of growth stocks. This is the real Fang. This is the OG Diamondback Energy. I'll take this Fang over the Fugazi Fang, or you like the Fugazi Fang better?
I think you own them both.
Ooh, own them both.
This one looks just like the other Fangs, doesn't it?
Touche. Touche.
Well, the
Looks better
y-axis
than
doesn't.
Amazon, I'll tell you that much.
The y-axis doesn't, but the shape of the chart might.
Would you just saying this one's up 10x and Nvidia's only up 6? Is that your point?
Well, no. My point
Not
was
all those Fangs have done so well, for the record.
I know. I picked the best one. See
Yeah.
that?
But yeah,
right.
so this is Diamondback Energy, ticker symbol Fang. It's the OG Fang. You know, before people on TV started making things up about other Fangs. You know?
All right. What will be the next great stock market acronym? What will it be?
We haven't had one for a little bit. We went from Fang to Fan Mag, but then it's on Mag 7.
Oh,
so what comes after Mag 7?
Maybe it's going to be a commodities-based acronym.
No.
I mean, but at the end of the day, the people who come up with these acronyms are the people who matter the least, right? So it's like sell-side analysts and TV people, right? It's people that are in the entertainment business, not in the let's make money in the market business, right?
All right.
So we're just not good at this.
Can I bring Kenny on?
Right?
Yeah.
All right.
I'm going to
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Oh, Kenny Glick in the house.
What's up, player?
Don't be a dick. Vote Glick.
I got new shirts. Who wants one? Who wants one?
All right, talk to me, my man. What's on the
acronym.
radar this morning?
I have an acronym for you, and it still works to this day. It's been, I don't know, quite some time. BTFD.
In what? And in the NASDAQ, in the Qs.
Basically, the Qs every day. Thank you for inventing these daily options. Where did we leave off yesterday? I said, look at the market so cute trying to go down. It won't go down. And if you bought the 480s or the 481s yesterday, I think it was just a 200 or 300% gain. It's getting kind of boring now. I'm going to assume one of these days it's not going to work, but I'll give you the levels. You know, we got Tesla coming out. I thought Tesla's news was already out, but that's going to affect the Qs today. The level right now is yesterday's VWAP. So you got 479.92. You're above that. You're probably going to start going right back to the pre-market highs, you know, like in the middle of the night, which was 481.22. And again, that might not sound like a lot, but when you're buying a 30-cent option, again, if you guys don't know, I trade QQQ daily options, and for $300 now, you get to hold $500,000 worth of stock in your hands. It's fantastic. So the Qs only have to go up $1 or $2 to double or triple your money. So it's where I live. And other than that, it's right back to the same stocks. You know, the fraud stock turned out to be another good buy. Strazza, phenomenal. They
Which one?
back under 10. Found some love again under 10. Awesome trade.
Which is the fraud stock, Kenny? The fraud stock? Which one? Which fraud stock?
Oh, Sava. They've been charged with fraud for maybe the 9th time, and you know, again, it's never come back to its all-time highs, but it becomes a great day trading stock over those those days where it is under those accusation days. And again, it's been a great trading stock. You know, give me a stock under 10, it goes up 22% for the day. You should be making money, and that's where we live. You know, again, day trading is all about getting paid and getting out of here. By 11:30, I'm hitting the bricks, as we say, going
hit the bricks, pal, and beat it.
Beat it. You are going out. The bids are weak. Effing bids are weak. You're weak.
Too good, Kenny. Too good. All right, give us one more. What's on the radar?
I got one that made me think of my kids, because I don't know when it happened, but when a team would play another team, they would say we're versing that team. I don't know where they started using that, but a company VS Versus Systems was in play this morning. VS, no idea what it is, but it came across the scanner with a decent volume explosion. It's already had the blow off top, but if it gets back above that 244 and gets above the magic 250, that's where these things get real jiggy. But right now,
this doesn't even. What are you doing? This is a $3 million stock.
Garbage. It's always garbage. These are not owned. You don't want to own any of these things, and again, you don't want to even be in them when they start to roll over unless you're shorting. But again, the action in the morning. That's what we're talking about. Again,
we need some market cap filters here, Kenny. We need some market cap filters.
Usually we're talking about the dirtiest, dungiest, awful stocks in the morning, other than, the regular stock. That's why I love the Qs. And again, I've been crushing UVXY yesterday. Again, Mondays and Fridays, if you watch the UVXY, any stability in the market, UVXY just gets destroyed. And if you have access to short it, usually you have to get a locate $28 a day from either Lightspeed or Trade Zero or whatever. You throw 1,000 shares on a UVXY trade, and you're making $500 or $600. Plus, those options just disintegrate every morning, every day. So it's good stuff.
Love it, Kenny. Drop the link where you can get Kenny's watch list every single morning. from the highest quality names to the lowest
The
quality
ninth
names.
circle of hell, as we call them. Dumpster diving.
Listen, if there's money to be made in the dumpster, I'm in, baby. Let's go.
Exactly. So yeah, I mean, it was kind of a slow morning. I haven't really done much. Just I'm watching the Qs. They've already found some love down there at 478.75. So if we roll there, we have such big support. Within 5 points of the Qs. That's why it's been so hard for them to go down. But if they go down, we actually might go down a whopping 10 more points. And then I don't know what happens after that. And then listen, we've got earnings season coming in 2 weeks. So, after we get through the banks, next thing you know, we're Apple and Amazon. And here we're talking Tesla and Netflix. And that's what the Qs are all about. So I'm going in liquid as always. And, again, I can't wait. This is going to be a lot of fun. I always say it's going to be the most important earnings season of our lives. It is. It's always the most important earnings season of our lives.
Every election and every earnings season, most important one of our lives.
Yeah,
right?
Exactly.
And every Fed.
As the again, I'm still not a bear-ish the market, but as I live my life as a bear, I'm sitting here stalking. Just give me a moment. Give me a moment, and I will crush this market. Again, we had the last decent sell-off was April. Again, April, and then you had one on May 31st, and that turned into the greatest rally of the year. So it's very difficult to be a shorter, but we'll try.
All right,
Do it.
Kenny's link is in the chat. Get his note every day. See you, Kenny.
My friends, I'll see you guys inside.
I know we got Stephen Place in the house. Can you just throw in can you throw up slide 2 before we bring in Stephen? Throw up slide 2, 3, and 4 here. I just want to go over something interesting that we talked about last night. Amazon's breaking out to new all-time highs. We're seeing that rotation back into consumer discretionary as we have seen so much underperformance there. There are Amazons in other countries, Kaspi in Kazakhstan, of course, which we've talked about at length, Sea Limited, Mercado Libre, Pinduoduo, Jumaya in Africa, et cetera, et cetera. There's an interesting dynamic going on between some of these. Amazon's breaking out to new all-time highs. Kaspi's pushing new all-time highs. Go to the next one, Spencer. So notice Sea Limited. So Sea Limited is still below this overhead supply from the last couple of years. Absolute ripper into this resistance. You've got the anchored VWAP going back to those all-time highs from a few years ago, and we're below all of that. So below overhead supply, below the anchored VWAP, but big base. Now look at the next one. And then here's the Coupang. So this one's in South Korea, right? So Sea Limited in Singapore. This one's the Amazon of South Korea. Notice how it is above all of that resistance over the last few years. It is above the anchored VWAP from the all-time highs. So just an interesting comparison between the two when you're going down the list of the different Amazons, if you will. This one, you see that, Strazza? Any thoughts on that when you're comparing the two?
Coupang has a much cleaner base. Sea Limited has worked much better. We're just getting into Coupang now, around 20. We jumped this one. If you're a Hot Corner member, we were in the 40s just because we knew it was going to turn around and start following its peer group. But you're right, that overhead supply zone, like as good as Sea Limited has already been for us, flip back to the chart. We like it so much more when this base finally breaks out and we're trading in the 80s.
Yeah, I mean, they're different trades. That whipsaw in Sea Limited before, that was one thing. Now it's something else. And I think that now it's a fair comparison with Coupang. Caught
the failed breakdown, traded the range, but we're wary of this big overhead supply zone that's coming up. And you're seeing sellers come in already just over the past week or so. It started to stall out a bit, at least lose some of that momentum we've seen over the past few months.
Before we bring Steve on, Tesla's moving. Their deliveries are out for the quarter. They produced 400, little under 411,000 cars. They delivered about 444,000 cars in the quarter. Again, both those numbers are down, which is what the market was expecting. So that's the numbers are out, and stock doing its thing. Looks like 5% decrease year over year. Market was looking for a 6% decrease, so they came in above estimates there. Stock just spiked on that news. So
anyway. It was a beat. It was a beat.
Yeah, it was a beat.
Sorry, I spilled my coffee. Right. Can I do software quick, or we got to go?
Yeah, can we bring Steve on and then you can do software after? Okay, let's bring Steve Place on and then we'll do that afterwards.
Yo,
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Stephen Place in the house. What's up, my man?
Up? What's going on, guys? How you doing?
How much you deadlifting these days?
Not a whole lot. I got into the old man bodybuilding stuff. It's like rehab with style. So it's just light and high reps and, not trying to kill myself right now.
And when you were trying to kill yourself, what were you picking up?
500. Not,
500?
No, look, that sounds like a lot. That's an okay number for people who
But
have
you're
been training.
tall. Isn't it harder for tall guys?
No, it's the opposite. Like, you'll see all those strongman guys, they're super tall, they'll deadlift, but squatting hurts, So
got it. So the squatting is harder for the tall guys.
Yes, it sucks.
All right, and what are you benching? Are you benching, or you're not trying to kill yourself on the bench either?
No, I hit a 330 a year ago, but yeah, I'm just doing high rep stuff.
330.
So, no ego lifting, just trying to stay healthy, get my shoulders in shape, and go from there. Yeah.
God bless. God bless. Yeah. All right. And how about the market? Are you trying to kill yourself, or are you being conservative here too?
Well, that's what I wanted to talk about today. The easy money trade, you go after the laggards in high beta tech. They're all looking great, the Amazons and Googles and so on. But I want to talk about the Lucy and football trade. For those of you that watched comics, the shows, you've got Lucy. She puts the football down. Charlie Brown tries to kick it and pulls it away, right? And every once in a while we get a Lucy football narrative, and the one right now is rate cuts. The market narrative has been consumed by bullshit politics as well as the AI trade. That's done exceptionally well. No one's talking about rate cuts. The Fed's not going to cut in July, but it's about a 50% chance going into September. And that's a long ways between July and September. A lot of data can come out. Mm-hmm. And I'm not saying that they're going to cut rates, but the anticipation of that leads to a buy the rumor, sell the news. If you go and you look at how ARK trades when Fed fund futures start to lift, that's when ARK starts to move again. So that's kind of the theme that I'm interested in. I've got some. Well, Kenny was talking about dumpster dives. Yeah, we're gonna be trash pandas. We're gonna be raccoons and go check around the dumpster and see if we can find some plays.
And more so dumpster diving in this environment versus others?
Well, let me just give you a couple different themes. So one thing that I've been looking at is what are the stocks that ARK, specifically ARKK, owned a lot of at the bottom of 2022, and they don't own a lot of anymore. Okay.
So in other words, the names that got puked out at the bottoms.
Yes. And a lot of them are still puking, and they're actually starting to reach, I think, capitulative lows. And these are, look, do not fall in love with these stocks. They're probably, they're going to see dilution, reverse splits, and so on. But there are some plays there that have just been straight down for months. And if you see it's either a bang or a whimper. If you see a bang, you get capitulation, hard gap down, a lot of volume coming in. That's probably going to be a good place to interact with the stock. If it's a whimper, then you wait for some kind of a double bottom or a divergence or something like that. So I don't know if you guys got my slides or not.
Yeah, let's get into it. Let's go.
Okay.
First one, T-Doc you got, right?
Yeah, Teledoc looks like absolute garbage. This is a 30-minute chart.
All-time lows
really
yesterday?
Moves. Yeah, it's something like that. And it's almost an algorithmic sell program. Anytime it interacts with a 20 exponential moving average on a daily chart, it's finding aggressive sellers. So there's probably someone who's just doing a sell the rip campaign, trying to get out as much as you can. It's still, I think it's a hedge fund hotel kind of setup. And we're getting close to a place where if we start to puke, the options, specifically call options, specifically longer dated, slightly out of the money call options, are going to be undervalued relative to the volatility that we could see to the upside. So it's not necessarily saying, try and pick a bottom. It is a way to express an options position saying, when this sucker squeezes, it's trading sub $10 right now, it'll probably retest 12 at some point. And I wouldn't be surprised if the stock really loses the bid and just gets crushed, and we see a bunch of volume with everyone puking, but the stock fails to go lower, you scoop up some calls right there, you're probably going to be in a pretty good position.
And how's the implied volatility? Are these calls expensive or not?
Let me see. Well, expensive is relative to realized vol. And the interesting thing is the actual volatility of the stock is not really high,
Right.
but the trend, right, and that kind of trending risk, which doesn't really get priced in the options market very well, it's been very high. So you could have sold a put thinking, oh, the implied volatility is high, but it continues to just constantly trend against you. You know, unless you're like trading stock around the position, you're getting smoked.
Is this really the type of name you want to be selling puts on though?
No, absolutely not. But I know that there are a lot of option traders out there who look for very high implied volatility rank, and then they think it's a good time to sell options when it's usually the worst time.
Yeah.
And it's sad that a lot of people get sucked into that kind of trade. And when we see very high spikes in implied volatility, it's often the time to be buying calls, not selling puts, because the calls you'll see option implied volatility sell because people sell calls and they don't want to buy calls, they don't want to speculate. Um, and so, you know, when you the realized volatility is a thing that's important, and usually those really high vol events lead to strong moves to the upside by way of short covering rallies, and those aren't priced into the options particularly well.
Steven, does this
Oh,
mean anything to you? All that support from back in the day?
now look, it'll probably not act clean. It'll probably shoot through it, right? It's just everyone's puking right now. So if you saw kind of a failed breakdown, like a 2B reversal thing, that
Yep.
would be a great setup. But
Yep.
I really think you got to see some kind of a puke to really get in. You know, if you want to dip your toe in the water, just do a single cheap contract, and then you're not going to feel like an idiot when I'm early on this trade.
No,
That sound
that's
good?
that's an interesting call. So if you get the puke and then the reversal that gets you back above the 16 lows, there's your entry, right?
Yeah. And the easiest thing would be wait for a close above the 20 EMA because it hasn't seen one since this really nasty earnings event from February. And that would just be a way to keep it clean. Or, you know, if you want to wait for a trend, you might be waiting months. But this is
Teladoc still at 1.5 billion in market capitalization. It's
yes,
bigger than I thought, to be honest.
yeah. A lot of these, I don't know if you have my other slide, but
Yeah.
DNA, which I still call Genentech. I'm pretty sure that was the original ticker name, but it's now I don't even know this. I want to say Ginkgo biloba, but it's Ginkgo Bioworks. And this one again, same kind of thing, and it's still got a really high market cap. You're like, wow, that's actually
Dude,
pretty impressive.
Place is an OG when he's calling this Genentech.
Yeah,
I remember that.
I still type in 4 Qs when I'm looking at the Nasdaq, not 3.
Dude, I still have a watch list that has 4 Qs on it, and
yeah,
every time I change it, I forget to save it, so it keeps coming back. That's how old that watch list is.
yeah. So this one is it's trading at 30 cents. That they're gonna have to reverse split. They're probably gonna have some dilution coming up. The whole thing's trash, but it is one of those that used to be an ARK holding, and I think it still kind of is. And there's a lot of people who chased ARK that are still not ready to puke, and this is getting to a puke point. And we're getting to a point like this one, you just trade the equity like an option. Like it's either going to be a double, triple, or nothing. But again, look for volume to come in. You know, high R vol is what we're looking for, ideally on a gap down, and that should be a decent place to play.
Steven, you should unbuckle more buttons, right? I think you should have more chest hair sticking out. Can we get a zoomed in look there, Spencer? Can we get zoomed in look at the chest hair?
This is one of the phases of my midlife crisis. I've decided to be a 2-button kind of person instead of a 1. I'm getting gray chest hair. My wife thinks it's attractive, and so I'm just going to roll with it.
No, I'm into it. I'm into it, Steven. I like it.
It's solid.
I like it. Listen, you know, you don't got it. You can't show it off, but you got it.
Yeah.
I see you, dog. Let me ask you this. I'm seeing the Carvana on your list here. That's an interesting one that is near and dear to our heart at All Star Charts. Why don't we talk about what's happening there? Same idea, basically.
No, this is going to be a different theme. So I don't know if you guys can see that circle down there. That's when the insiders bought Carvana in a pretty decent size, and I saw it back then, and I'm like, there's no way in hell this is going to work. This stock's a piece of junk. You know, and it's just going to continue to go lower and so on and so forth. And that was the low. And then it traded up to $1 million a share, whatever Carvana is trading at. There's another slide on there that also shows the insider purchases of a really trashy stock. I'm trying to think of it off the top of my head. but I'm blacking out because it's live video. Do you have the other one on there?
We got
Chewy.
SCG.
Yeah, Chewy. That's
Chewy.
the other one where insiders started piling in, where that yellow circle is. And they were early and the stock ground lower, but eventually it did spike up. Again, I saw those insider purchases and I'm like, what the heck are they thinking? That's the stupidest thing I've ever seen. Chewy looks like trash and so on. Right. So I say that to say this. Go look at purple. And I've got a chart of purple up on there.
What is purple?
Purple, those mattresses.
PRPL.
It's a mattress company. And they did really well during the e-com mattress phase that saw a lot of growth. They threw an IPO out back in 2021 because it was, basically free money. Not 2021, 2019. The stock spiked from $6 all the way up to 40. It's now trading at $1.10. And the CEO came in and bought 200,000 shares. And I'm looking at this saying, no, that's stupid. There's no way this is going to work. This stock is a piece of junk. Well, how many times have we seen that work? So I'm not saying that this is an absolute bottom in purple, but it is a dash for trash. And if the CEO is buying at $1, and I know they're probably going to have to reverse split and do some other things, but you can actually see a very, very healthy insider appetite in this name during this entire time. So, trade it, don't date it. But it could be one of those where things get kind of weird and all of a sudden it's a 10x. I'm early on this, so I just want to put this out there. This is not me calling the exact bottom on purple. But if it bases out for a little bit, it's got some inventory to clear out above $1.70. But let's see, where's the swing view op from the 2021 highs? Let's try and pull that up really quick. And it's not on that chart. I'm just going to throw it on there. $8.50. And the 2023 high was at 573. So if you're buying at $1.10, you treat it like an option. It could go to 0 or it could go to $4. Right? That's decent risk reward for me.
It seems like whenever a stock is named after a color, you probably want to fade it, right?
Yeah.
Yellow is a 0. Purple, right? Are there any other colors out there?
What red box?
Any of that green?
You beat me to it,
stuff was
Steve. You beat me to
scam.
it. I was about to say red box.
Yeah, blue.
Right? Anything green was all scam.
No,
right?
holy shit! Bluebirds at all-time lows. BLUE.
Bluebird
There's
bio.
something there. It's like wine. If you ever get a bottle of wine and there's an animal, any kind of animal on the label, you can't drink it.
Okay.
Like if there's like a bird or like a chicken.
I didn't know that
any
was
kind
a
of
thing,
animal
but
on the label.
I could see that. Yeah. What's the 12 hands horses one? That's like the cheap one you can get for cooking. Yeah.
Dude, they put glue in that stuff. You can't drink that shit. The cheap American wine will kill you. If you're gonna go cheap, you got to drink the European stuff.
You need to have. You need to at least have a pissed off French accent when you say that. These Americans with their horse glue in their wine, and I'm a terrible French speaker, but I think that was close.
You're a Floridian gringo, right?
Yes, I'm a Florida man. Exactly.
Yeah, you are.
Hold on. I got one more stock because I know we're almost out of time.
Yeah, let's go.
Related to that theme, and this one actually looks good, and it's going to be rack space. The reason I like rack space, it's going to be a good theme to dig into if you're so inclined. They've got a couple $2 billion in debt because it was a private equity spinoff. That debt is indexed to the SOFR, right? So the cost of their debt is very low in 2021, but when rates go to 5%, now the cost of their debt is very, very high, and they lost a lot of cash flow. But what they've done is they've actually gone out to the open market and bought their debt, some of their debt back at better prices, and they're actually able to spin that off. So if we start thinking about the anticipatory trade into a Fed rate cut, this is not a guarantee it's going to happen. We're just running on vibes here. Then this one I think could go. And it's actually a nice little stage 1 base. It's seen a couple years of accumulation after a really nasty downtrend. And it looks good on a pullback right here. It's a pretty clean setup.
And when you say stage 1 base, that's like a Weinstein thing?
I don't know. I think I got it from Brian Shannon.
Who got it from Weinstein?
Yeah, it's the accumulation phase. And it's one of those, it did see a nice breakout. It is coming into some more significant levels back from 2023, but nice little pullback right here, and then you get a breakout above $3 or so, and it's game on. This is also a server play, so if you want to go with the picks and shovels AI trade, you've got semiconductors, you've got base load power, and you've got server space, and they have a lot of it. So that could be another one where, I don't even know if they're going to be part of the AI trade, but if price leads narrative. So if you get a spike higher, then someone will find a reason to attach a narrative to it, and they say, oh shit, it's an AI play all of a sudden, and then you get all the degen momentum players coming into play.
Are you a real degen, or are you just throwing that word out there?
I dabble every once in a while. One of my better trades in 2021 was buying a pawn shop that had silver exposure when silver was going crazy. So every once in a while, I've got the boring options stuff, the options income, the investing style. I think
The only
RXT
person
is
that
a
calls it the
longer
boring
term.
option stuff.
Well, yeah. Well, look, there are some options trades where, 20% is a win. And a lot of people go into options not wanting 20%, but those tend to be much higher odds as well. So that stuff is mainly my bread and butter. And then we've got the directional stuff as well for some extra action.
I got one more stock for you
All
that
right.
you brought along, and I want to talk about. But quickly, chat, big fan of Stephen Place. Stephen, can you just give the folks some perspective as to what your day job is? Through what lens you're looking at the market, what you're doing, what you're trying to accomplish during the day.
Yeah,
That'd be really
so
helpful.
just quick background. I got started in this in 2007. Howard Lindzen and Phil Perlman found me on Twitter, and I started helping StockTwits out with some newsletters, and then I ran a couple option trade services on my own. Got acqui-hired in 2021, and I run a couple trade newsletters as well as some coaching services on my own, or with a larger company. So I view the market. I think technical analysis is the worst term on the planet.
Yeah,
I think it's a very silly idea. I think liquidity analysis makes more sense. And understanding the nature of liquidity as it pertains to narratives and other price action is, that's what you guys do, right? And that's what I do. So I've got a service, Precision Volume Alerts, that does liquidity analysis. We've also got an insider product as well, Insiders Exposed, Insider Report, that we're trying to anticipate some of the catalysts before they happen by looking at those insider purchases. So that's what I'm doing.
Okay, last stock. I appreciate that color. SEDG capitulation setup.
Yeah, it was another one, and this one I've been looking for. I thought the most recent gap down would have been capitulation, and it just didn't hit. It's still overvalued, right? It caught a nasty gap down on one of their customers going under. The solar space, other than First Solar, the solar space looks like crap right now. But we are coming into spots where, if you go on a longer term chart, you go look at the 27 almost all-time lows, there might be a potential support play right there, but I want to see the puke. I want to see those last funds finally throwing in the towel because, they're looking like idiots because they should have just bought Amazon. And instead they tried to get cute, buying a quote unquote undervalued solar play. And so once those folks puke, and it might come after the next earnings event, which is at the end of this month, then the options are cheap. The call options are going to be cheap enough where you can just play it for a bounce and get some really nice returns. Allegedly, all right, full disclaimer and so on. Yeah.
I want to zoom out here to give the folks some perspective. Spencer, if you could throw up slide 2. I mean, this really tells an interesting story. You see that consolidation up there within this was one of the biggest winners in the market. It might have been actually the biggest winner in the market over that period. And then what an absolute collapse. So just to put things in perspective, do you think we go down and retest those late 2016 lows? You could play a bounce if we get back above 30. There's a few different situations here. Would you agree?
Yeah, it's bad enough I have to put it on a log chart so I can actually see the 2016 lows. But believe it or not, I don't know if you follow volume profile too much, but we are coming into a low volume node back from the 2016, 2017 range, as well as a gap fill right around $21, actually. So we're kind of close to some internal pivot levels. If you see that choppy sawtooth pattern at the beginning of 2016, interacting with those lows would be really interesting as well. And that kind of coincides with
hold on.
that gap fill.
You just throw out sawtooth pattern? Did I get that right?
I'm just eyeballing it. It looks like a sawtooth, right?
What is a sawtooth?
It's a shape. I don't know what to tell you, man.
Is this like a Florida man thing? I don't know what a sawtooth is. What is that?
No, it's from signals analysis. I was an electrical engineer, so it just zigzags.
All right.
Zigzag makes sense. Okay, there we go.
Sawtooth. Hey, listen, I've been at this for decades. This is the first time I hear that one. Sawtooth.
Yeah, and I mean, you'd be shocked at how much, like, I could use the phrase dampened harmonic oscillator. That's what the 2016 action looks like right there, where you get we call it a triangle pattern, but that's the signals. That's the electrical phrase for it.
You're such an intellectual.
I try, man. I'm an exquisite bullshit artist.
You're not just a handsome fellow with great chest hair. By the way, next time you come on the show, we can get a zoom in there, Spencer. Next time you come on the show, we just want it wide open. Just
all right. Look, if you want a posing routine, I absolutely can.
Yeah.
I'll throw on my stringer tank top and we can do a flex off. How's that sound?
All right, deal.
You got to give the people what they want.
Yeah, Spencer and Stephen Place with a flex off.
All right.
I don't know about that. All right.
All right. Share the socials and all that on the show notes, Spencer, please, so everyone can follow Steve.
Yeah, dude, the links are in the description right now. Steve's Twitter, Steve's site, they're in there. Check them out. Steve, it's been a pleasure. It's been a couple of years since you and I have spoken, so good to see you. Good to hear from you, and thanks for coming on.
All right, take care, guys.
I'll be down in Florida in January by you. We'll hang out.
All right,
cool, sweet.
Nice.
Stephen Place. He's, by the way, OG. Stephen Place was part of the StockTwits blog network.
That's what he said.
Like a zillion years ago. Myself, Josh Brown, Joe Fahmy, Greg Harmon, Brian Shannon, Eddie Elfenbein was on that list. Lindsay Perlman. Who am I missing? I feel bad because I'm missing some people. There was some crazy guy. Charts Gone Wild. This guy was nuts. He was on there. Anne-Marie was part of that list.
Anne-Marie.
Yeah, that's quite the crew of OGs. This was like 2009, 2010. So shout out Stephen Place, OG. John McLaughlin.
Right. Yeah. Sounds like it was quite a crew. I was in high school / college at that time, so I was not reading in most blogs. Unfortunately, I wish I had been. I wish I had been.
Happy hours.
Yeah. I
happy
have
hours
a lot.
in Soho. It all started. That's where it all started, Spencer.
Soho?
Happy hours in Soho turned into this massive, communication network that is FinTwit, if you will, today. But they were just happy hours down in Soho. No big deal. Who knew?
I'd have a lot more money now if I was paying attention back then. I'll tell you that. But them's the breaks.
Yeah.
All right. 9:25 here. Let's talk about the hot corner, and then in a few minutes we'll bring on Patrick, and we'll see where that gets us. So we kind of talked about today's hot corner yesterday a little bit, but we'll cover the rest of them now.
So hot right now.
Yeah.
Are we going to talk about the kitty in Witches Roaring?
So now it's becoming a pretty popular take that this might be Ryan Cohen's money, some way, shape, or form. We've been saying that for a couple months.
Strazza's like, called it. And there's nothing illegal about that, Strazza?
Depends how they're doing it.
Yeah, true. So there are ways to legally do illegal things.
Listen, I have a pretty low bar, and I think this should be illegal. I don't know how, but I think they should make it illegal because it's terrible. This is nuts. So he files the 13 passive. I guess, how could he be active? So 13G, he's in almost 7% of the outstanding shares.
Hold on. You skipped right through that. So he filed a 13G, which is like a Warren Buffett style filing where he doesn't want to do anything. He just likes the stock and he just wants to be in it, versus a 13D, which is a more Carl Icahn style filing, which means that you want to be an activist.
Yeah. So probably not the skill set or experience to be an activist.
But you don't think... But what are the legalities of that? Like, if you do file a 13D, do you have to be an activist? Like, are there things that you have to do?
Harminder's asking for a Strazza spotlight on software. I think we're going to give it to him.
Are we, hold on. wouldn't it have been funnier if he filed the 13D, or does that come with additional responsibilities that he's just not into doing?
I don't like he could, but he's not going to be an activist. Who's going to take him seriously?
Well,
You
first
file-
of all,
Yeah.
First of all, not a lot of the things that Mr. Kitty does is taken seriously. So wouldn't it be extra funny if he filed the 13D? That's why I'm asking.
All right,
Or are there additional responsibilities that come along with such a filing? That's all.
He had his fun. Throw up the form, Fonz, and let's just show the cat part.
Actually, I found this amusing. I'll be honest.
Oh, did you? I bet you did. So funny, right? Because this stuff's supposed to be funny.
Come on, it's government filings. Let's loosen up a little bit.
But okay, you know what? This goes back to what we talk about when we discuss the hot corner. That these filings, like they try to do their best with it, but there's nobody watching this. You can file what you want. JC always finds it funny when they file the old paper reports and fax them in. So he just kind of doctored this form up before he uploaded it. And I don't know if there's even something. I don't think the new form has anything like this. I think it might have used to say, are you a corporation or not? But there's really nothing that's supposed to go in this section where he added the stuff about I am a cat, I am not a cat. So he just doctored up the form, added his own lines to it, and then uploaded it to the SEC. And this is what appears on the SEC website, right? So this is a great example of how no one's going in.
Is that really, did he really do this?
Yes, this is real.
Yes.
Wow.
But this is my point about how no one's watching these things. We have to read them and do our best on how to interpret them. They could be false. They could be inaccurate. There could be little errors in them, or somebody could add a line that they're not a cat on the form, right? But this is the world. This is the world that we operate in when we're digging through these regulatory filings. Just to be clear, this stuff gets through.
And you don't find this funny,
Strazza? I think it's stupid. I think it's pathetic. I think it's really ridiculous.
JC, come on. You and me think it's funny.
Dude, are you kidding me? This is comedy gold right here. Are you kidding me, Strazza? Live a little, bro.
So I'm out of Chewy now. I was in. I liked it.
He was offended by the cat thing.
I was happy with my Chewy position. The cats were happy with the Chewy position. Now I had to sell my Chewy shares because Roaring Kitty is messing up my life. All right. I don't want to be involved in that. And frankly, I hope that the hedge funds absolutely crush him this time around. So
wow, hating.
Yep.
Hating on Roaring Kitty. You just pissed off that Roaring Kitty follows me on Twitter. He doesn't follow you.
Oh, dude, I don't want that guy. And that movie sucked.
I didn't watch the movie.
Hey, I tried to watch it and I can't because it turns out I didn't know this. If you have the Netflix with ads, only certain movies are available to you.
That movie was so bad.
I tried to watch it and they were like, you have the cheap Netflix, you can't watch this. And I was like, all right, I guess I'm not watching it.
I'll be a proud boomer. No, I have no problem taking the other side on this one. I think it's all ridiculous. I think they need to find out what's really going on here and investigate him. And there needs to be a Wells notice sent to both him and Ryan Cohen.
Oh, you're such a downer, dude.
You saw the thing yesterday that he is being sued, right? You saw that?
Who's being sued?
Roaring Kitty.
No, it got dismissed.
Already?
Yeah.
He's not. This is not going to just be okay at the end of the day. Because what you don't do in our world is you don't mock the SEC.
That is also true. That is also true. But since we are not the ones mocking them, I don't care. I find it hilarious. I agree with what Strazza said. Don't do that because they're going to come and get you, whether it's illegal or not to get you. They're going to come and get you. So he's right. But come on, Strazza, that's hilarious.
It's fine. It's a little close for me too. Elon Musk would mess with anybody, right? What happened with the SEC? Even Elon Musk can't mess with the SEC.
Sure.
I feel like he got the better end of he got the
he got away
with them.
Listen, I think they were this close from barring.
He's the richest guy in the world, and if you work for the SEC, you're probably not anywhere near the richest guy in the world. So he's going to win at the end. But Strazza's right; it's not a group that you want to mess with. But for us outsiders that are just observing the situation, it's hilarious. I'm all for it. I'm here for it. Makes my mornings better. Strazza's got a spotlight coming up now. He's going to talk about software. I know exactly what he's going to say. I don't have to hear it again. But you guys tune in. I am going to go. You guys have a great rest of your show. Love you guys. Say what's up to Pat for me. Adios.
I'm not kidding. I think both of these guys should be barred from the securities industry. I think they're bad for capital markets.
What did Ryan Cohen do? What did Ryan Cohen do to you?
Dude, you can't just tweet shit out and run heavily shorted stocks. It's absolutely absurd. And he's working with somebody who is inside at the company. That's not okay. It's not okay. He's an insider. Doesn't make
Ryan
sense.
Cohen has been famously tight-lipped this entire time. That guy says nothing.
Yeah.
He says nothing, so we don't really know what he's doing.
Anything he says is evidence. He's not stupid. I have a side gig as a regulator. Billy, I used to live in that world. That's why we do the hot corner. That's how I cut my teeth on Wall Street, working in regulatory and compliance departments, accounting departments. Listen, I loved what Stephen Place did. I just wanted to add some stuff to it because he's using insider data similar to how we do, and then crafting trades around it. I think it's awesome. And then also he had this tilt towards catching downtrends. You're almost forced into that when you deal with insider information because 95% of the time they're filing and buying shares in something that's in a nasty downtrend. So I love that he kind of had that mindset of like, how do we kind of find the bottom and pick a hot trade in this one? So two things stood out. Throw up the Carvana chart because this is one of the like most classic hot corner examples now we have. So we saw these guys coming in when it looked like Carvana was literally going to zero. We were talking about the empty Carvana car towers in South Florida.
No, they had all this debt that they couldn't. Yeah,
it looked really bad. They did stuff like from a cap table perspective. I think what's his name, the president of the company, like injected a ton of capital near the lows. Actually, I think he did it a couple times in 2022. Regardless, we had open market purchases in like October of that year, right around the lows. We got one more flush. Right, which is exactly what Steven was just talking about. He's looking for that washout, that exhaustion move, right? We get the flush, which you see right at the end of 22 into the beginning of 2023. We hook higher, we buy that failed breakdown. The rest is history. But the insiders were there. They put it on our list, right? Then we saw the short interest. We paired that with the short squeeze data, plus the insider buying, plus this little hook higher, failed breakdown. Let's go up 1,200%. 1,200% since the insiders and we were in. We were in pretty much 25 cents higher than the insiders.
So who got this trade idea? I'll tell you who. Members of Hot Corner Insider. That's who got this trade idea December 1st, 2022. If you want to get in and get those ideas, the link at the very first link in the description on YouTube is Hot Corner Insider. Check it out. That's where these ideas are being posted, just so you know.
My cat's messing with my wires now because she heard that I closed out my Chewy position. You see how this goes.
Oh boy, no.
Listening to me. All right. I promised people software. I wanted to talk banks. I'm so into software right now. So I took off the interview with Stephen Place and I put together some software charts. So I think we could just do it. We could do a whole bit. We could bring Pat on for it also, since I have no.
Yeah, we can do that. I mean, I also have like a Strazza bumper we haven't used in quite some time.
And I also want to just show the coal index quick, Fonz, if you just want to throw it up for everybody, because I was making points with no data to support it earlier during the state of the markets, which I always feel bad about. I'm telling you guys about this Trump trade that's going on. Coal stocks, best single day performance since 2020. That's political stuff being priced in. There's no other way to look at this. So this is what's going on right now. You see it just like when interest rates move a little bit, you don't get big moves from the interest rate sensitive stocks, right? When the polls move a little bit, or really we're looking at the odds in Vegas move a little bit, you don't get too much moves from like political trading perspective. But when the polls move the way that they have since late last week, then all of a sudden you get that bid, right, in these themes. But you need some sort of momentum. And we got that momentum in the, I guess, presidential odds. So you will see some price action based on that. What you don't want to do is take this kind of information, or what stocks did on one single day, and say, oh, if Trump gets elected, I better own coal stocks. They're going to be the best stocks. Like we've talked about on here before, it not only doesn't happen that way in reality and through the whole cycle, but in fact, sometimes we see it happen in opposite ways. A lot of this stuff will get priced in ahead of the actual term for the new president, and then you'll see a big unwind throughout the presidency.
Can I make a motion real fast?
Please.
Okay. I move that we strike 2020 from the record when it comes to historical comparisons.
You could strike whatever you want, because we do have, these externalities that occur and make, affect markets.
So I move that if something is the highest or the best or the lowest or the worst since 2020, then you should really just go further back and look what happened before that, because 2020 was such an externality, such a black swan event, frankly, that everything is the best or worst or highest or lowest in 2020, right? So Not sure how relevant that year is in the broader trend. I mean, it happened, so you can't disqualify it because it happened. But in terms of comparisons, I don't know. You're comparing everything to the same period of time. That's my thought.
Fine. I get what you're saying. It was, listen, it's a strange moment in market history, 2020.
No doubt.
Very strange
Okay.
moment.
What-
Hold on. Question here in the chat. Question. How do you have a problem with Roaring Kitty tweeting, but have no problem with Nancy Pelosi having insider information? Are you paying attention to what's happening?
Great question. That's a great question.
No, it's not. It's a terrible question. Nancy Pelosi goes and she buys her in the money call options, right? And makes bets on the biggest tech companies that, mind you, everyone owns, right? Like she makes a great trade on NVIDIA. The whole world owns NVIDIA, right? It's not like Nancy Pelosi, some sort of special investor. She's not special. Also, she's a tadpole, right? Kitty has become a whale. He has to file Form 13s now. He's moving markets. The Pelosi's don't move markets. Even when their political filing hits, people don't want to hear this, but it doesn't move the market because no one cares. No one takes them seriously. And they're playing with very small dollar amounts. Very different.
It's a great question. Great answer.
They are intentionally moving markets in the Chewy and GameStop examples. Very different from Nancy Pelosi just being, a good insider and following the laws.
You want to do software? Should I bring on Pat and we do software with Pat or what?
I would love Pat to hear my spiel on software.
Pat, you're about to hear Steve's spiel on software. Get ready.
Yeah, what's the deal with homies? Seriously.
Fellas, how we doing?
So,
I purposely didn't bring software because I knew you would probably cover it.
So, Pat, my friends tell me it's going to be a hot girl summer. I tell them it's going to be a software summer. Neither of us understands what the other one's saying, but I finally brought the charts. Maybe I'll send these to them. What do you think? Software?
I think it could be a software summer. Absolutely. I mean, you nailed it. It wasn't the top, right? And we're already seeing it. It's been up, what, like 4 weeks in a row? Five now?
On top.
Yeah. And I know you got your eyes on this too. Someone in the chat just asked about it. Home builders. Well, we can talk about that after, but
we do. Can we do software first for crying out loud?
But they're where software was 4 weeks ago.
They are, and guess what you're getting right now? You see this little green circle on IGV? You see that little shake? That's what's happening with the home builders right now. If you look at something like DHI, I'm not stopping out here. We were down like 2.5%. We're already trading at the highs of the day. If this thing scoops back above those pivot lows, we'll get to it. We'll get to the DHI chart. Change the subject on me. The point is, we're making the bet that DHI, Lennar, and the home builders end up looking like software. Why? They're one of the strongest groups in the market. The primary trend is higher. You have this multi-month topping looking formation. It's really been all year, like a 2-quarter top. And these patterns tend to fail over and over again in bull markets. Why? Because we're in bull markets. And when we're in a bull market, you want to err in the direction of the underlying trend, which is higher, which means that tops should fail and actually be continuation patterns. I think that's what we're seeing here. You could have sold puts like we did at the base or at the top breakdown level, right? You could have got in, started building a position when we reclaimed VWAP from year-to-date highs. You could wait for confirmation on a break above the year-to-date highs and the prior cycle highs. That happens around 89 and get in there. Regardless, I think we got another, whatever it is, 25, 30% back to 115. Go to the other charts, Fonz. Actually, show the relative trend also. Got the relative. Yeah. So not only has software done nothing this year, this is a bull market group. That's the point, right? This is a secular leader, particularly in bull markets. Some of the best stocks ever, probably the best in my career. They have gone completely sideways, have made zero progress versus the S&P 500 for over a year now. Look at the relative trend. We got the base breakout. Now we're getting a nasty little retest of that base breakout coming off of that support zone with some veracity here. I think software only a matter of time until it breaks out. Now, go to the other failed breakdown marked up charts, the Sky, the Hack. It's not just software, right? Software is a big theme. It's a big group. We got packaged software. You got enterprise software. You got cloud software. You got cybersecurity, which tends to be software.
Steve, right? Is it basically non-semi tech that's working?
Yeah, I think so. I think you could throw in the internet. Yep, 100%. It's the software hasn't gotten the same AI type bid, right? So
Right.
there's a catch-up trade in a way where the semis and the AI stuff has really gone crazy, and software's just kind of lagged and hung out here. But there are different secular forces at play for a group like cybersecurity. These stocks have a lot to be excited about for the future. That has nothing to do with AI, right? So it could be a AI diversifier in that way too. But I think again, the hack and any of these cybersecurities, you could try CIBR, you could do iHack. They all look the same. You get a little failed break, a little shakeout. Now I think we're going to get a breakout. This is a great place to be into the second half. Let's show the cloud. Cloud hasn't made nearly as much progress as its peer groups. You can see the prior cycle highs in the left-hand corner of the chart here. Regardless, the primary trend is still higher. We're still climbing up the right-hand sides of this base. I think the base is in. You see the 200-day sloped up. You see one failed top last fall. Rip higher. You see another failed top happening right now. I think we rip higher. This one's probably going to head back to the prior cycle highs. And there's so many good names within these groups. You could just go look up the components, go crazy. And they come in all different shapes and sizes. We'll get to that in just a second when we look at the individual charts. But the point I want to make here is that when these tops failed, for all three of these ETFs, Pat, and these are indexes, they're baskets of stocks. So for Sky, for Hack, and for IGV software, go measure their performance off the October lows into the February highs. They all rallied about 35%. I think we're entering a new kind of reaction phase higher like that. Now, what do? We dive in. We look beneath the surface. We find the strongest stocks with the best setups. I brought a couple. Let's look at ServiceNow. If you've been following us, if you watch the Hot Corner, you've heard us talk about ServiceNow for, I don't know, a year and a half now. Pounding the table. Look at the shake. I mean, this one's so clean with the shake. You get the shake beneath the prior cycle highs. Also took out the pivot lows, right? Shorts dive in. We trap the bears. We rip it higher. This one's about to make new all-time highs. If you're not on board now, I think you get right on board at a breakout above these pivot highs. You could define
this one has always been such a clean chart too.
It's beautiful. I love the way it trades. And this is a giant company, right? This is one of the big cap tech leaders. It's the right kind of space. Next. They come in different shapes and sizes. What do I mean? Rather than buy a breakout above the prior cycle highs, you could buy a fresh reversal pattern. This one, the reversal was in, I think, late last year, early this year, and then just chop. And it's just, if the trend doesn't scare you out, sometimes it wears you out. Shout out Brian Shannon, right? This one was wearing people out all year, just straight sideways. Looks nasty. Looks like it was falling back into the box. We get that big shake on the ugly Salesforce report and Adobe report from, a few weeks back now. And then we rip higher. You got the 38% Fibonacci retracement there. You got some really, really clean price resistance and price memory from August 22 and summer of 2023, above 115. Datadog, the reversals in. I think we go back to those old all-time highs. And now, because we just had Stephen Place on talking about catching falling knives, there's something for everybody in software. Throw up Zoom. I mean, you could go crazy. This is counter trend, right? This is a mean reversion setup in the Zoom. But man, Pat, this hooks higher here. I'll be involved. I think this stock goes to zero, to be clear. Maybe it gets bought, I don't know, a couple billion. But it's probably heading further towards zero in the long term. If we scoop higher above these pivot lows, this level is so clean. Everyone is watching it. I think you could trap the bears, get a really nice squeeze out of this one. It doesn't have the short interest that it used to have. But I wouldn't be surprised if Zoom still traded with some hot momentum.
Now, do you think that would also get ARK to perk up? Isn't Zoom a pretty big holding in ARK or no?
It used to be. ARK has been dominated by Coinbase.
Okay.
Last year, Coinbase contributed more than 50% of the gains in ARK last year.
Okay.
Yeah. So I think really, if you're not in this home builder trade now, I think you wait for the scoop. Do we have the DHI and Len chart? It's probably on my Twitter if you want to grab it.
Yeah, Pat, Zoom is not nearly as large a weighting in ARK as it used to be. It's down. Okay. It's like the 23rd largest holding.
If Coin was such a big holding, I would have thought that ARK would be doing a little better.
PLTR is another one. Shout out, Phil. We love Palantir. I'm in it. Common and calls for a kicker right now. I think we break out of this multi-month range. Palantir also has been looking really good in the tape where other speculative growth maybe has been mixed. And so we are seeing relative strength from something like Palantir. I don't know, Pat. What do you think about my thesis that semiconductor tech is among the best places to be into the back half of this year? Got any pushback for me there?
Nope, not at all. I think you hit the nail on the head, and it also allows semiconductors to correct. You know, we've spent the last 5 weeks talking about how extended semis are and all that. Well, this is kind of the remedy. This is the this is how they get out of that. Is you do get that rotation, and we're talking about the biggest sector of the S&P here, tech. So it's really important that you do get that rotation when you see an area like semis all of a sudden become the biggest area of the tech sector. How poetic is that too? Like semis just surpassed software to become the largest, and then all of a sudden that whole relationship reverses.
Yeah, you're right. You know, it's kind of like NVIDIA surpassing Apple and Microsoft.
Yeah, I mean, it was kind of part of that whole thing too, because NVIDIA had a lot to do with the reversal in semis and all that too.
All right, let's just show people what we're talking about in these homies.
And NVIDIA, you know, or semis, you know, they could just chop around sideways. They don't necessarily have to correct in you know, the way that we often think of corrections in a sharp decline, but they could just chop around while those other non-semi areas of tech start working.
Brant, home builders don't follow lumber. If they followed lumber, their charts would look like shit, like lumber.
So Steve, let me ask you with the home builder charts, do you want to see them kind of whipsaw? Do you want to see a little false breakdown here?
I like it so much more today.
Okay, so if it wasn't just a clean failure where it found support here, you wouldn't like it as much as if it just poked through.
My alerts are set. I hope it pokes back through today. If it happens tomorrow, that's great too. If it takes a little bit longer, I don't love it, right? I want this to happen in a couple of days. Some like with Apple, dude, it was like 2-3 days, rocketed higher. Like that's really what you want. If it takes a couple of weeks, it doesn't mean it can't still be a bear trap, right? And you get a nice hook higher. I just think odds are higher at that point that it actually is what it looks like and becomes a top, right? The longer it hangs out, you kind of want it to hit and ping off and see that demand just kind of come right into the market there. So what Pat's describing is where we have the green arrows drawn here, at least in DHI. And DHI is my vehicle. I'm not in Lennar, I'm in DHI. We got a little breakdown gap this morning. And if that breakdown gap turns into a big green stick by this afternoon, I mean, that's your trigger. That's your entry. And that's one of the best entries because that gives me the idea, right, that all I need is follow through tomorrow to confirm a move, and then I'm getting a leg up, right? So if you're playing it in the options market where time matters, and the faster I get my move, the better, right? Then something like that where you get the failure, what do we say? We say from failed moves come fast moves. We don't say from failed moves come moves. Come fast move, right? So we're looking for that automatic slingshot reaction higher after you get a failure. And it tends to be some of the greatest setups for trading options because you also have that time component and you want your target to be hit as quickly as possible.
Yeah, and Steve, I don't know if you mentioned this, but the reason this, you know, how this resolves is so important to the broader market is that semis and home builders were the ones that led us into the bull market last year. So if you start to see them start breaking down, you got to ask yourself, about the broader market and how that's going to hold up.
Yeah, listen.
Or what's that? What is that saying about the broader market, right?
So, great point. Let's talk about
if they do break down, but you're betting on them not breaking down.
Listen, right now it's breaking down, right? So let's talk about the other side. If these are tops and home builders, that's not good. This is a leadership group, it's a pro-cyclical group, right? I think you could even call these like commodity stocks, right? I call them economy stocks, right? They speak to the broader economic environment that we're all in right now. They give us a really nice domestic read, right? You don't want to see home builders roll over, print tops in the middle of a bull market. And you wouldn't expect them to, which is why we are.
You know, it doesn't have to be a top. It could correct here 10% and still be above last year's breakout level. So maybe we're just talking about, even if it is information, maybe it's just a 10% correction in the broader market.
You can always get like a break for a little bit, right? And a little bit more downside, but no real follow through. Then eventually a hook higher. That could happen here too. And then neither of the scenarios that I outlined, right? The bullish or the bearish scenario really plays out. You just get some more uncertainty there. It looks like, you know, it's been a bifurcated market already. where groups are moving in different directions. But this has been one of those groups that you can rely on during this cycle. It was an early leader this cycle. I think outside of semiconductors, it's home builders are probably the second best place this entire bull market. So to lose a leader like that would be kind of like, that'd be a head scratcher, right?
Absolutely, yeah.
It probably wouldn't be because of lumber prices. Interest rates have much, much bigger impact on this than any sort of commodity prices. These guys are hedging.
As Brian Harris pointing out in the chat, Tesla's doing Tesla things today.
Tesla's just doing a Tesla, right?
What is Tesla doing today?
It's moving like Tesla moves.
Oh, wow. That Head and Shoulders is resolving higher.
JC still got it. Look at that.
JC was talking about this. I don't know.
Still
I don't remember when he first brought this up. It could have been a month ago. I think it was about a month ago, honestly.
Man, that chart shaped up fast. In like 2 weeks, all of a sudden it went from looking terrible to looking decent.
You got a shake, you got a coil, now you get the ripper. It's nice.
Hey, have you guys talked about energy?
I think Pat brought some
little bit.
I think this is time. It's time for the Patrick spotlight. I'm going to go heat up my coffee and get ready for recess.
Well, I do want to talk energy with Steve later, but I think energy is at a really interesting spot here. I see Larry in the chat. We used his chart for chart of the day yesterday.
Well, Patrick, luckily today is the day that we get sick of each other because we're talking.
we talked 3 times.
Yeah, we could talk about it on the chart.
That's a good
we will. But no, throw that chart of crack up, the oil refineries. Just finding support right at former resistance here. I mean, it tried to crack that level so many times, no pun intended, over the past 5 years. It acted as resistance. Now you're finally seeing it act as support here. I'm asking myself what it would look like for the broader market if energy starts leading here. Does that mean all the other areas of the market start breaking down, or can it kind of participate with all the other sectors? Because a lot of the times when you see energy start rallying, it's like kind of an all or nothing market where it's just energy and then nothing else. So if it does get a bid here,
aren't we sort of in an all or nothing market right now? It's just not with energy. It's just
with mega cap tech,
right?
Yeah. It almost feels like people are just kind of like camping out in mega cap tech during this like summer lull here, because volume's just fallen off in things like SPY and things like that. So for the last like 3-4 weeks. So
don't you get the sense that everyone is just kind of waiting for the rotation to happen and camping out, maybe not buying, but just camping out in like homies or energy or whatever, financials, kind of waiting for the inevitable rotation out of tech?
Yeah, I mean, we've been waiting on small caps and down the cap scale to start participating forever, and it just hasn't. But if you look at something like Russell 2000, I don't think I brought that chart, but it's really coiling there. It's getting real tight. So small caps, I'd probably expect them to resolve not anytime in the next couple weeks, but maybe a month or two. You'll probably finally get that resolution.
Pat, what do you make of the fact that the banks were breaking out yesterday while interest rates were having their biggest 2-day surge since February?
Ooh, that's you know what? I didn't even notice that. You're talking about the big banks, not the regionals, right?
JP Morgan all-time high.
I mean, just look at the last 2 candles and all the big banks.
Yeah,
these guys want it, and they're like, well, who cares about interest rates? Our balance sheets are fine. We're not regional banks. Look at us. We could pay back, our capital. We could pay dividends. We could buy back stock. We got some money.
It really felt like that interest rate move that you saw in the last like week or so was all crude oil, because they were kind of rallying together like that. So if crude reverses here, I don't know that it will. I think it probably will go a little higher from here.
Crude's been killing it.
Yeah.
Reverses. How about that base breaks out?
Yeah. Are you watching any specific areas of energy?
I got long LNG 2 weeks ago on that big Bollinger Band squeeze breakout. And then I actually put on Exxon calls yesterday. I don't have. Listen, I got Valaris warrants. I think I got some little shit like short squeeze play.
You said Exxon calls?
Even in the IRA, I'm very light energy right now. I will get heavy again in the future, but I'm trying to kind of pick my spots here and be ready for it.
Yeah.
Exxon looks better than the other majors. It's kind of been the case.
Do you think TLT will dig in here or no?
I was looking at Devon. I was looking at Fang. Do I think TLT will dig in?
I know I kind of hopped around here, but
dude, it's
just back to business as usual.
Every moving average I have on this chart is sideways. Like this is just the hottest mess. Overbought, oversold. Like it just can't. Bonds are tough right now. Plus, I'm happy to look at the bond market, but then I'm typically going to take what I think about the bond market and apply it to equity market vehicles. Rarely will I look at the bond market and be like, "Ooh, I got to get in for this."
Got to put a TLT trade on.
I just can't resist this 5% coupon. Some of these they pay you every month now. For certain people, they are excellent alternatives, but it's a little boring for me. Buy utility before I buy a bond. I don't buy those either.
All right, let's do some recess and get out of here. How about that?
Well, we're gonna run it back in what, about an hour on Spaces?
Maybe. Anyone got anything?
Anything? Oh man,
My recess is light today. I don't know if I have a good recess.
you got any plans for the 4th?
No, nothing major. I don't know. Do you guys doing anything? By the way, speaking of the 4th, we're not doing a show on Thursday. I think we're also going to not do a show on Friday as well, just because Friday is going to be a super light day. And is that okay with you, Steve?
Yeah, that's great. I love to know these things. That works for me.
I'm telling you 3 days ahead of time.
Look at this. Wow.
So no, but you guys have any? I have nothing. I'm just going to a friend's house just to hang out, but I got nothing going on.
Probably just going to a barbecue. But I mean, now if we're not doing this Friday, maybe you catch me in Miami. I don't know. I gotta,
You should maybe go to Miami for safety reasons, Steve.
Well, thinking about that also. So
You got a hurricane headed toward you?
Yeah, so that would kind of work. We just went and spent a night or two in Miami. Might be a good idea. Problem is sometimes with the winds and the water, like you want to be here. Like I feel like I must protect this house. Like when the hurricanes hit.
What are you gonna do? What are you gonna do?
You feel that way, You're like, what if we take water? I got to be there. So it's it's always kind of tough. I also have cats, but I have no recess today. My recess is join us on Chart Request Live at 1:00 Eastern time and Spaces on Twitter. And is it on Stock Market TV? The Spaces? It's not, right?
No, it's just on Twitter, just on the Chart Report Twitter account.
11:00.
Yeah.
Who knows what we might talk about?
Who knows?
The Gin Blossoms playing for free July 3rd in New Jersey. That sounds awesome. That is a
What?
that I would
Who?
go.
The Gin Blossom?
Dude, yeah. 90s rock is really the best rock. People don't know this. A lot of people don't realize that, but 90s rock, some of the best stuff we have.
I haven't been to a concert in like 5 years.
I used to have the time of my life. They had a concert series in Stamford, Connecticut every summer. It was called Alive at 5. And we got like all the best bands. So we'd see like Sugar Ray there, Third Eye Blind, Eve 6, like Blink 182. And it's just like in the little town square. It was so fun. I think it's probably going on right now if you're anywhere near Stamford. Pretty sure it's
all right. Cool. So Spaces in an hour. Steve, I don't know if you're doing the Flow show today. You'll figure it out with Sean. You'll figure it out.
We're gonna where we do it and when we do it. I don't know exactly, but
Chart Request Live 1:00 every Tuesday, every Thursday. Oh, no, except for this week. No, Thursday, obviously. So email your request to questions@stockmarketmedia.com or put them in the chat, and the guys will take them if they can. And that's what we got. So thanks to Stephen Place. Thanks to Kenny, as always. Thanks to Pat. Pat, we've missed you. It's good to have you back on. I know it's early for you. We appreciate it. And go make some money, everyone. All right?
Cheers.
That's it.
I can't take no loss. I don't even know what it